Certain investment stories seem more like folklore than factual accounts. They tell of dreams coming true and fortunes made overnight. This is not just any story. It's a voyage marked by uncertainty, fervor, and steadfast faith. A man who saw beyond the present into a future that many could not have imagined, and a man who transformed the ordinary into the remarkable. As I mentioned, I found each transaction to be a little frightening. They have gotten scarier and scarier, I guess. Like, even if Tesla was doubling from 30 to 80, I think I do remember buying. I seem to recall thinking, well, perhaps I shouldn't be doing this. The price of Tesla recently quadrupled, however, Tesla's $850 now, and that was not split adjusted. So going from $30 to $80 back then was like going from $7 to $15. Isn't that right? That looked like a big risk, purchasing a Tesla. Following a double seemed quite dangerous at the time. However, since then, Tesla has increased by 100 times. Therefore, it really doesn't matter in the long term. This is the reason you shouldn't actually buy. If you're a long-term investor who buys and holds, it doesn't make sense to try to timing anything. I personally don't believe in purchasing on the dips. I don't attempt to timing anything, such as when I turned over my 400 into Tesla. I recently placed what I believe to be a $400,000 market order. I avoided using a dollar cost average. I simply bought everything at once after selling everything. That 401k is now valued at $5 million. I mean, I could have done a little bit better, but I may have also lost out on some upside if I had dollar cost averaged. I used to hold off on buying anything until I had saved up between $10,000 and $20,000. However, as I began to observe how innovative Tesla was, my conviction began to solidify. It was still misinterpreted by Wall Street, the general public, and even Google employees, like the very intelligent technical staff at Google. Some of them, I think, didn't even get it until I got them in my car and told them to drive it. And when you witness someone shift, I believe that giving somebody a test drive in my Tesla was one of the rare instances in my life when I truly witnessed someone shift in perspective. You can actually see the difference. Hello? This is Tesla Stock News. Today, I'll walk you through a story that appears to be fiction, but it's actually very genuine. It tells the story of how one man's audacious Tesla investment permanently altered his life. We'll unveil the 5 things you must do to retire like me based on Jason's astounding technique. His tale is not just about financial success from living out of his car to making millions. It's also about having a vision and taking a risk that paid off in ways most others could only imagine. Recall that every investment tale entails both risks and benefits. We're delving deeply into the beginning of our tale took place in the early 2010s when electric vehicles were barely a blip on the automotive scene. Now, introduce yourself to Jason DeBolt, a regular person with remarkable vision. Jason, who was then just another face in the crowd going about his usual 9-5 job, happened onto Tesla, a company that would completely transform his life. He was drawn to Elon Musk's concept because it was bigger than just automobiles. It was the future. Jason took a jump in 2013 using only his life savings and faith. He made a large investment in Tesla, purchasing shares for just $2.50. It was a risky but daring action that many would have avoided. Jason's wealth increased along with the rise in Tesla's shares. However, this is a steadfast conviction rather than merely good fortune. Through highs and lows, Jason never sold and never lost faith in his shares. Not everything of his voyage was without cost. Jason even lived out of his Tesla Model 3 for a while in order to accumulate money for additional share purchases. His commitment was unparalleled. When the unthinkable occurred in 2021, Jason was able to retire at the age of 39 and become a millionaire as a result of his $12 million all-in Tesla portfolio. And that's only the start of this amazing story, my friends. Let's examine the ins and outs, the tactics and hazards in greater detail, and discover what lessons may be drawn from Jason DeBolt's incredible trip. Thus, how precisely did Jason DeBolt transform his audacious idea into a multi-million-dollar success? It all began with a tactic that wasn't for the weak of heart, but ended up being quite profitable for him. First, make large investments in stocks that have strong convictions. Above all, Jason embodied the strategy of making bold investments in stocks that have strong convictions. Let's dissect that. Jason's steadfast dedication to Tesla stemmed from his strong faith in the company's goals and possibilities. Early on, he realized that Tesla was about more than just automobiles. It was about transforming energy and transportation. For Jason, these stocks represented more than simply stock. They were part of a vision that he viewed as the future. Here, the idea is to find a business that you both believe in and think has enormous growth potential. It comes down to completing your research, being knowledgeable about the field, and having a sincere faith in the leadership and long-term goals of the organization. The important thing to remember is that this strategy is dangerous by nature. Putting a significant amount of your money into one stock increases the possibility of both gains and losses. It makes sense to put all of your eggs in one basket. Even though Jason was successful with Tesla, it's crucial to keep in mind that these kinds of success stories are uncommon. Since diversification spreads risk, it is often advised while investing. High conviction investment, however, defies this logic. It takes more than just faith in business to place large bets on a single horse. One must also have the guts to persevere through market fluctuations and the financial fortitude to absorb possible setbacks. The second is to have a long-term buy and hold mindset. Now that we've explored the high-risk realm of large-scale stock investments, let's move on to another essential component of Jason DeBolt's approach that was vital in his financial prosperity. Jason's journey involved both the location and the raising of his wager. This takes us to the second important tactic. We'll discuss developing a long-term purchase and hold mindset. Jason showed incredible tenacity throughout his investing career. He weathered the storms of market turbulence by holding onto his Tesla shares firmly. Isn't about making fast money or reading the market. It was not a sprint for Jason. It was a marathon. Adopting a purchase and hold strategy for the long term entails believing in the future of your investment despite the unavoidable ups and downs. It's important to look past the immediate hubbub and concentrate on the potential state of the business several years from now. This approach necessitates perseverance and a firm conviction in your investing decision. It takes fortitude to persevere through times when the stock may decline or the market appears to be working against you, in addition to hanging on during the good times. Time and again. History has demonstrated that markets eventually recover. Strong foundations and cutting-edge goods and services enable businesses to bounce back and become even more resilient over time. Although this strategy provides advantages, it's important to realize that there are hazards involved in the long run. Not all investments grow or recover, and market conditions are subject to change. This approach necessitates both a rational evaluation of an investment's continuing potential and emotional commitment to it. Exercise caution when using margin. Now that we know the need of a solid long-term strategy, let's explore a crucial aspect of Jason DeBolt's investing technique that increases both possible returns and dangers. Our third primary approach is utilizing finance to increase the potential for investment. This is where we discuss the need to use margin sparingly. Jason's investment playbook included a lot of information about margin trading. Put simply, margin gives investors the opportunity to borrow funds to purchase more shares than they could with cash alone. Jason increased his Tesla investment by utilizing this method. He expanded his shareholding dramatically through the use of margin, which greatly magnified his returns when Tesla's stock price soared. Still, it's critical to understand that margin trading is a two-edged sword. It can greatly increase your ability to invest, but there is a danger involved. In the event that the stock price drops, you will be responsible for both the debt from the margin loan and the loss on your shares. Margin calls compel investors to sell their shares at a discount in order to pay back the loan, which could result in significant losses. It's a tactic that necessitates thoughtful deliberation, a thorough comprehension of the market, and the ability to manage financially trying circumstances. Reinvest all available capital is the fourth step. After navigating the margin trading route, high risk and big gain, we finally reach a strategy that is as audacious and pivotal to Jason DeBolt's incredible investing experience. The fourth essential component of Jason's strategy is reinvesting all of the available capital. About throwing caution to the wind, an approach that involves both financial and emotional involvement. Jason put nearly every extra dollar he had back into Tesla, not just his savings. This was more than just investing in the stock market. It was a decision he made for the rest of his life, throwing all of his resources into supporting Tesla. This strategy, which involves transferring bonuses, pay, and even the proceeds from the sale of his house into Tesla stock, may be viewed as extreme. This gave Jason the opportunity to significantly grow his investment, but it also required putting other financial objectives and safety nets on hold. Such a strategy necessitates both a strong belief in your investment and the ability to accept the trade-offs. It could lower your emergency fund, leave you with less money for other living expenditures, and even lower your standard of living. Even though Jason's singular focus proved to be quite effective, it's important to keep in mind that this tactic carries a number of significant hazards. It is deficient in diversification, an essential component of conventional wisdom in investing. Reinvesting all available resources is a risk mitigation approach that depends on individual financial circumstances and risk tolerance. It involves carefully weighing your goals in life and financial stability, and it's all about how much you're ready to give up today in exchange for possible future rewards. The fifth piece of advice is to be ready to make big sacrifices. Finally, and maybe most importantly of all, we get to the last but incredibly important component of Jason DeBolt's investment approach. This section is about thinking and lifestyle versus money. The fifth important lesson we learned is to be ready to give up something important. Jason's tale serves as evidence of the tremendous lengths people would go to in order to fulfill their financial ambitions. Jason showed a great deal of dedication by adopting lifestyle decisions that not many people would take into account. Living out of his Tesla Model 3, he reduced his rent payments to increase the amount he put into his assets. This was more than just investing. It was a total commitment to cause that oriented all facets of existence. This extraordinary degree of selflessness indicates a mindset in which financial objectives not only permeate daily decisions, but also play a central role in life. It has to do with putting capital ahead of short-term comfort and traditional lifestyle expectations. Such a plan necessitates a laser-like focus and a readiness to give up the comforts, security that most people take for granted. There's a less traveled path where the pull of instant delight gives way to long-term financial goals. This method integrates one's identity and way of life with the primary objective of financial success. It is not only about investing and saving money. It's a journey that calls for mental fortitude, perseverance, and the ability to resist society pressures and fleeting impulses. But striking a balance between aspiration and well-being is essential. Although Jason's sacrifices were fruitful, they also presented difficulties and tensions of their own. It's critical to consider how such sacrifices may affect one's happiness and health. Whether or not to accept substantial sacrifices in the name of successful investing is a deeply personal choice with wide application variations. Deep awareness of one's own boundaries and the possible effects on one's own and one's family's well-being are necessary. Investing industry, it is up to each investor to set their own path, weighing risk, return, and well-being. That's the amazing tale of Jason DeBolt and his experience with Tesla stock. A story of audacious decisions, unwavering belief, and transformative outcomes. We've now covered the 5 key tactics that characterize Jason's path. Reinvesting all of the capital that is available, using a long-term buy and hold approach, using margin carefully, investing aggressively in high conviction equities, and being willing to make big sacrifices. However, this story raises some important, please remember to use the like button. For us at Tesla Stock News, your support is greatly appreciated. Make sure you enable notifications and subscribe as well. I appreciate you seeing. Stay energized and prepared for triumph until the next occasion.